Welcome to the Mayor of Money podcast with former Burlington Mayor Rick Goldring of Goldring Financial Leadership. In this podcast, we provide successful business owners, including doctors and dentists, with insights to minimize tax and risk while maximizing retirement income and future legacy. Join us for this journey as Rick draws from years of experience and guest experts, including successful entrepreneurs, to provide unique strategies and approaches to estate and financial planning matters, as well as business in general. Now, on to the show.
Well, my guest today on the Mayor of Money podcast is Vanessa Scott, the National Living Benefits Consultant for Manulife. And a lot of people may not know the terminology living benefits, but we're going to get into that with Vanessa today. But Vanessa, what particular problems or challenges are your products that you offer through living benefits? What problems or challenges are they meant to address?
Well, it's actually going to address the one that we don't ever want to talk about. And that is, what if we aren't perfectly healthy? What if there's a bump in the road and that means that we're maybe not working for a period of time? So we have the ability to replace your income while you're dealing with being disabled, not being able to go to work. And we also have some solutions that will help you if you have a scary diagnosis. And when we talk about scary diagnoses, we're talking about things like cancer or heart attack. Again, typically a bump in the road for us. But typically when we have that bump in the road, there's financial ramifications. That's where we step in and we solve some of the financial losses and ramifications of a health issue.
So before I press the record button with our discussion, today we were talking about the sports team analogy. And, you talked about the fact that you're a big football fan. And I'm a big football fan, hockey fan, basketball fan, car racing fan, and go on and on and on. But recognizing that successful teams, in my view, need to be successful offensively, but also defensively. Just because you put a lot of points on the board doesn't mean you're going to win. And you've got another analogy that's related.
Yeah, absolutely. And it's great that we're both fans. I'm strictly a football fan, which allows me to have a lot more time in the given year. But when I think about football, I, again, think about financial planning and saving and everything else as related. So I think about an offense. So a good football team has to have an offense. And to me, that is investments. That is saving for retirement to move ahead, to move the ball, if you will. And then I also think that if you don't have a good defense, as you've mentioned, then you're not going to win the game either, if we consider the game of life. And to me, the defense is having appropriate life insurance strategies and tax planning in place, making sure you have the right kind of solutions, the right amounts, you name it. And then I like to think of living benefits, or a solution that pays out while you're alive, as special teams. And anyone who is a football fan, especially this past season, recognizes how important special teams are. They can win or lose the game in that critical moment. And I like to think of that critical moment as when we have one of those health hiccups, those speed bumps.
So for many people, when they're an employee of a company, oftentimes the company has employee benefits, and there may be some long-term or short-term disability, are both. But for business owners that are out on their own, whether they be a lawyer, a doctor, or a developer, or an urban planner, they don't have those particular benefits. How can self-employed people address these particular issues? So there's two particular products that you're involved with. One's disability insurance, which I like to call income protection insurance, and the other's critical illness. Let's talk about the income protection insurance. How does that work?
Sure. So what we do for a business owner, because you're exactly correct. Typically, they are not part of a group plan that an employer offers because they are the employer. And as self-employed folks, they also don't typically have very many of the government protections that perhaps an employee will have. So they have the onus to have that conversation and put their own safety net in place. So what we can look at is we look at a business. We recognize the business owner is integral to that business. What we can do is ensure their overall profits, whatever they're generating on an annual basis. And we can ensure that so that there's income protection, or what I sometimes call paycheck insurance. So again, if they're out of the workplace, out of their business, that stream of income continues.
So, a lot of business owners are very busy. They're growing their business, and they've got so much to do. They're like the plate juggler with the plates at the end of the lawn sticks at the circus. They've got many things going on, and I believe my job as an advisor to help bring to the discussion some issues that business owners may not have time to talk about or may not wish to talk about under normal circumstances. So my job is to make people aware of some of the challenges that could be ahead of them and figure out a way to address them. So when we're looking at disability, what is the chance of somebody on average getting disabled prior to age 65? Like, is there a meaningful risk that people need to address or should address?
There unfortunately is. Now, one of these stats is a little bit older, but typically it's 1 in 3 Canadians during their working career will have a disability. And the measure that we do there is we talk about a disability that would take you out of the workplace for 3 months or longer. So we're not really counting the couple of sick days here or the flu, what have you. We're looking at the more substantial items. And then the scary part of that is if something is significant enough to keep you away from your business for 3 months, on average, you're going to be away from your business 3 years. And a lot of us haven't secured financial strategies that will help us manage that kind of a gap.
And so let's get into it. Income protection insurance. There's a number of different factors to consider. And one is your occupational class. The less risky the occupation, the lower the premium. The more risky the occupation, the higher the premium. But what are the major reasons for claim on income protection insurance? Why do people go off on a claim under?
Yeah, actually.
What are the most prevalent?
Oh, perfect. And I'm actually going to quote Manulife stats from 2020. We don't have the 2021 yet. We just haven't collated them. But in 2020, 23% of our claims were for mental health conditions. So that's stress and anxiety and depression. And 23% is also from musculoskeletal, which is a fancy word for saying anything that is a joint or bends. So you can think about your neck, your shoulders, your hips, your spine. So roughly half of our claims are for those mental health issues and for those musculoskeletal, those joints that we bend and use every day.
So with the mental health claims, that must be more of a challenge to adjudicate than the physical claims. How do companies like Manulife handle that? What lens do they look through in determining whether somebody is eligible for a claim?
And it's a fair point because they are a little bit more subjective. For example, you and I could both have the same mental health diagnosis. We could both be on the same prescription, and one of us is able-bodied and able to manage that condition and go to work every day and not have that, moment where we're out of the workplace. So what we look at is for that client, how are they responding? It's not just about having a diagnosis of a mental health condition. It is, does that disable you? Does it take you out of the workplace or reduce your ability to go to work? So what we do is we work with attending physicians. We look at if someone is in treatment, whether that be a prescription or seeing a counselor. And then we rely on what those counselors are telling us as far as how the client is doing.
So it's very much you get input from the healthcare practitioners involved in the treatment of the person who is applying for disability, and you really rely on that particular input. And despite, as you say, it's interesting that different people, same condition, same medication could be handling things differently, and your adjudication process is able to address that.
Absolutely.
Yeah. So one of the challenges we've had, obviously, in the last couple of years is COVID-19 and the pandemic, and it's been 2 years. And how does COVID play a role in the underwriting of disability insurance or income protection insurance? And let me ask that question first, and I'll ask you the question with regard to claims.
Sure. It's interesting that we've all been suffering through COVID for way too long, but it really hasn't changed our underwriting process whatsoever. So of course, when someone comes to us and says, would you protect me for, we do a little bit of back and forth. It's called underwriting. We look at them as far as a risk and we make sure that we're comfortable. When we look at COVID, unless someone is in the throes of COVID, so they're currently ill or they're still having symptoms of perhaps one of the more serious cases of COVID, once you recover from COVID, you're fully insurable. Now, if you have one of those longer conditions or it's more serious and you have some ongoing side effects or symptoms, we do wait for those to clear up, and we typically look for 1 month after those have sort of subsided in order to go forward with an application.
And what about the claims? If you are off, if you do have the serious form of COVID that continues for many, many months where you're not as effective as you normally are, is there the possibility that you can claim under a traditional disability insurance policy?
Absolutely, there is. And fortunately, with vaccinations, we're seeing less and less of those really serious side effects of serious COVID, if you will. But those are absolutely a claim that would be payable. Well, the nice thing about income protection, paycheck insurance, disability insurance, whatever word we want to use, we don't really measure the what. What we measure is how. So it's not what keeps you from the workplace, is how does it keep you from the workplace? And it might keep you totally out of the workplace where you're not able to go to work at all. Or it might be a situation where you can still go to work, but you're not as effective. Maybe you're not working as many hours or doing the same duties. Or maybe it's you're suffering a loss of income because you've lost a patient or a client base.
So that's helpful. Now, one of the things with regard to business owners and trying to ensure their particular incomes, because that's what income protection or disability insurance does, it protects a percentage of the income. Now, with regard to business owners, often they leave so much money in the business and they hardly take out anything. And often when they take it out, it could be a loan from the business. It could be for dividends as opposed to a traditional T4 income. How do you decide, or how do you underwrite or decide how you're going to cover a business owner in those circumstances?
Well, the good news is we work with business owners all the time. So we understand the flexibility and a choice that a business owner has when it comes to their income. So what we look at, a business owner, we really look at them as their business. So what we look at is the net profit that they generated last year. So gross income minus expenses, but before taxes. We look at that number and whether they are actively taking that money from the business, reinvesting it, putting it in retained earnings, whatever the case might be, that is what they generated last year. That is the net result of their efforts. And that's actually the income that we can insure. But we also know that because there is a little bit of flexibility, what we do with that net income is we actually bump it up. And what we call this is a perk or a gross up. We actually add 20% back in on top of that number because we know on occasion, a few personal expenses will fall into the business. Not every lunch is a business lunch. Not every kilometer is a business kilometer.
So that's interesting. So basically you have a business owner that maybe gross revenue of $1 million, expenses of $700,000. They may pay themselves $100,000. So their net profit is $200,000. And you would look at your comments, you would look at the income that they paid themselves as well as the $200,000 of profit that they could have paid themselves.
Absolutely.
So that's good to know for a lot of business owners, because I think it can be a challenge for them getting their head around what can be protected with regard to disability insurance. So obviously income, occupation, what are some of the factors that affect the type of policy or the cost of a policy for income protection?
Yeah, we look at a couple of different factors. Age, gender, and smoking status is really basic for all insurance because that does dictate sort of a risk class. What someone does, of course, that's your occupational risk, because a 40-year-old has the same risk, assuming gender and smoking status is the same. Where it's really risk different is what you do every day. Are you sitting at a desk or are you lifting something heavy? Also, the amount of coverage that you're looking for obviously is going to factor into the premiums, as well as the design of the solution. So when we talk about the design, you really can decide how quickly your payment would start if you were disabled. We call that the waiting period. You can also decide on how long that payment persists for. Typically, we talk about coverage to age 65 because we recognize that for most people, a broken leg or a broken arm is a financial inconvenience. Most of us don't lose your home or your financial savings because you have that small, short-term condition. What we're really trying to protect is for something unforeseen that is significant. So we want to make sure that during your entire working career, your income is covered. And then, of course, like all plans, you can further customize that. We call those optional riders, and you can really dial it in and design it so it makes sense for the business owner.
So that's great. So we were talking about disability insurance or income protection insurance. Now, one of the relatively newer forms, and I say newer, probably 30 years in Canada, is critical illness insurance. And I must say, as a sort of preface to our discussion about critical illness, when I saw that this particular type of insurance became available as an advisor, I bought a good chunk of it. And the reason I bought a good chunk of it is because I remember in the 1960s, when I wasn't very old, and my dad had a major heart attack and he could not work. And yes, he was paid a little bit from his employer, which was a bank, for disability insurance. But I do know that it wasn't a lot. And the stress it put on my family, my mom was a stay-at-home mom, was most challenging. So I didn't hesitate in buying $500,000 of the critical illness insurance, and recognizing I still have half of it now. And you have comfort knowing that if I am disabled, if I have a heart attack, stroke, or cancer, I will receive $250,000, which will cushion the blow, cushion the financial impact in my business by having that particular coverage. So there, I just explained a little bit about critical illness insurance and why I believe in it strongly. But it came out, it was originated in South Africa, correct?
Yes.
And can you give us some background as to the rationale and how this product came to be?
Sure. So there were actually two brothers, two doctors in South Africa, the Dr. Maurice Bernard and Dr. Christian Bernard. And one was a surgeon. So Dr. Christian Bernard was the surgeon doing organ transplants. And this is really the first kind of successful organ transplants, heart transplants that ever occurred in the world.
Well, he did
and
the first heart transplant in South Africa ever, right?
Yes,
was Dr. Christian Bernard.
Yes. And his brother, Dr. Maurice Bernard, was in charge of aftercare. So, balancing out the conversation. And when he saw his patients coming through these serious surgeries, one of the things he recognized is that they were saving people with these cutting edge surgeries, but they were also damaging and sometimes destroying them financially. Because as you've mentioned, when someone is not working, they're dealing with a critical health issue, they're often not going to work. And he saw a real disconnect between saving and hurting people at the same time. So he actually approached an insurance company at that time and said, can we do something? So it's kind of interesting that this is actually a solution that was created for and by a doctor.
So we alluded to how it works. How does it work? What does critical illness insurance cover?
Sure. And I'll actually compare it to disability insurance. So when we talk about income protection, that is measuring, can you go to work or not? And it provides you a monthly payment. Critical illness doesn't actually measure whether you go to work or not. Critical illness is all about, do you have this diagnosis? And with critical illness plans, there's typically a finite list, 20, 25 different conditions that says, if you have this condition, we will pay you a lump sum. It doesn't measure whether you go to work full time or you don't. It doesn't measure what it looks like to you. It's more, did this happen? And the difference between the two, of course, is one is a lump sum. It could replace your income, certainly, but it also sometimes allows people to finance changes in their life. If you've had a major health condition, you may not want to work 5 days a week anymore. You may want to take Fridays off forever.
Yeah, no, it's fascinating that like for me, having that, all this heart history in my family, knowing that if I had a heart attack, I would get $250,000 that would really help cushion the blow. And I know of people I've actually sold critical illness insurance to where there has been a claim, and one was a heart attack, and where the person said, my client said, it really gave him some peace of mind and bought him some time, took the stress off, and allowed him to recover in a more stress-free environment than he would have without it. And so the big areas of claim are, I mentioned one, it's heart disease. The others are?
The main one is actually cancer. 70% of the reasons why Manulife is paying out critical illness claims is because of cancer. And then we talk about cardiovascular, and that's, your heart attacks, strokes, bypass surgery. MS actually only has like a 1% payout of the overall, of course. And then there's a smattering of others. There's a number of different conditions, but there could be things like burns or loss of vision, deafness, loss of use of a limb, so if someone ends up perhaps in a wheelchair. So the main ones, of course, by far is cancer, with 70% of our claims being cancer related.
So I get the question on occasion when I'm sitting down with a client and reviewing their particular situation and identifying some risks that we want to manage with insurance tools. And the question invariably comes up, well, which should I get? Should I get disability insurance or should I get critical illness insurance? And as you mentioned earlier, they're so different. They're so different. And if money was no object, maybe you get both, but typically money is an object and is an issue. So what's your answer to that question?
Well, of course, my ideal would be both, and that's not as a representative of Manulife. That is more as thinking as a Canadian. I'll circle back to that. In my opinion, if you could only afford one, because disability coverage covers everything that could stop you from going to work and would give you that ongoing ability to pay all your bills, to me, that is going to be the most foundational. That's the most important. However, I do deal in analogies a lot, and I like to think of disability and critical illness as those safety features in our vehicle. So again, if you think about your financial strategy as a vehicle, disability insurance is that seatbelt. It protects you whether you're going 2 or 200. You shouldn't go 200. Whether the weather causes an error today, whether you make an error, or the person behind you makes an error and inflicts their will upon your day. Critical illness is more like an airbag. Your airbag typically won't go off unless it's a serious or critical event. But in a difficult situation, I think most of us would want both a seatbelt and an airbag. Again, it is always about being able to afford and make sure that you manage a budget. But the nice thing with both of those solutions is there's flexibility. So you can design and come to whatever budget that works best for the client. There's a lot of flexibility there.
One of the strategies using critical illness insurance for businesses is called shared ownership or split dollar critical illness insurance. Can you elaborate on how that particular works and why it might be attractive for somebody who's incorporated to consider?
Absolutely. This could be its own podcast because there's a lot of moving parts, but at a very high level, what we're doing is we're protecting the business with critical illness. So in that case, the company or the business owns the critical illness plan. And if the client were to become ill, the dollars would actually flow into the company. Now, where the sharing comes from is with critical illness, we also have this optional rider, and it's called return of premium, or what I like to call is like a return of capital or a money back factor. So what happens with the money back option is the client owns that portion. So they're sharing in the policy. The company owns part of it and they own part of it. And what is nice about those refund mechanisms is when a refund is triggered, typically 15 years or at a set time like age 65 or 75, then the client receives actually all the dollars that have been paid into the policy, the ones that they've been paying for that refund option, but also the portion that the company is paid for. When I say it's complex, the complex part is CRA has not affirmatively said when that significant dollar value goes back to the insured, the client, how is that all taxed? So that's a little bit more of a deeper discussion with someone like yourself.
But I guess the important thing too is they haven't ruled definitively the other way with regard to shared ownership of critical illness insurance policies.
Correct. They're thinking about it, but they're silent so far. So again, we're operating in a best case, worst case, most likely case guess with Manulife or with what CRA is going to do in the future. What's
the impact of different conditions, different family history on disability insurance or critical illness insurance. I know in my family, there's, grandparents, aunts, uncles, parents, heart and stroke is all the way through it. The difference is I'm followed. I have a specialist that I check in with on a regular basis. But I have all this family history, and other people have family history. Other people may have see a chiropractor for a bad back. How does somebody's personal circumstances enter into the underwriting process for both income protection insurance and critical illness insurance?
Well, at first we always look at the client. So we look at is the client under treatment? Have they had some past indications of potential issues like high blood pressure or high cholesterol, we know is a cardiac risk. The chiropractic, was that you go once a month for maintenance, or are you actively treating something that hurts? So we really look at what is going on with the individual today. When it comes to family history, we typically look at your parents and your siblings. And the reason we do that, of course, is, as you've mentioned, you can sometimes see conditions or concerns that run in families. Now, just because you have a little bit of personal history or family history doesn't preclude you from these solutions. If you are looking at income replacement and you've had a bad knee since high school and it's still kind of a less than perfect knee, then we can offer you coverage, but just not cover that particular knee that's always been that problem. When we talk about family history, just because you have someone who's maybe has family history of heart attacks, it's kind of a plus minus situation. So we say, okay, having family history is obviously a negative risk, but if you're taking care of yourself and your height, weight, and your blood pressure and cholesterol are good, that's a plus, and it kind of negates each other. So when we have more of a weighting on there's a few more negatives than there are positives, then we're still able to offer a plan. We just offer a plan with a rating or a surcharge. We charge a little bit more to compensate for the risk that the client brings.
Great. So just because of family history, or just because there may be a bit of a medical issue with regard to lower back or neck or whatever, does not mean you should not apply. And by
Absolutely.
applying, the underwriters will tell you how they're going to look at your particular situation. And there's no cost to apply, right? You can apply. You don't like the rating that maybe they want to charge you more, the insurance company, you don't have to take it. But you can apply.
Absolutely. It is called an application for a reason, right? It is asking, are you comfortable with my risk? And then we do that risk assessment, and then we make an offer. So it's kind of sometimes like buying a house, right? There's a listed price for the house and you make an offer. And sometimes there will be a little back and forth as you come to an agreement. And sometimes you make an offer and it's accepted as is. That's kind of what insurance underwriting is like too.
Well, Vanessa, thank you very much for the enlightening discussion we've had about living benefits, specifically income protection insurance and critical illness insurance. I want to say thank you to everybody tuning in to this particular edition of the Mayor of Money podcast. And remember, if you have any questions or comments, please let me know. Rick@rickgoldring.com. Thanks again for tuning in. And remember, we're still in a pandemic. Remember to stay positive and test negative. We'll see you next time.
Thank you for listening to the Mayor of Money podcast. Click the subscribe button below to be notified when new episodes become available. If you'd like to have a one-on-one discussion with Rick or have an idea for a particular guest or topic, contact him at rick@rickgoldring.com. See you next time on the Mayor of Money podcast.